Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is May 9th, 2025. This is episode 114. Vice President J.D. Vance this year is going to headline the Bitcoin conference in Las Vegas following last year's Trump lead. Cathie Wood predicts AI and Bitcoin to drive new phase of U.S. economic growth. Yeah, she's just reiterating what we already know, but she's pretty brilliant, so I'm curious to see what she says. Bitcoin whale, entry price, diverge sharply, confidence builds at higher levels, and BlackRock meets the SEC Crypto Task Force to discuss tokenization and ETP rules. All this and so much more on today's show. Welcome, folks, to Crypto News Global. We are seeing Bitcoin holding steady at $103,000. Everything pumping over the past 24 hours since Trump and the UK announced a trade deal was made. Now we have Trump going to Switzerland to talk to China about another trade deal between those two countries. And we're, of course, awaiting huge news, according to Trump. Best news ever. Excellent news. Positive news. So let's see. He said he's going to make an announcement before Monday. So let's see what exactly happens there. It's going to be interesting. Right now, let's get into some Bitcoin technical analysis. We have the BITI, as mentioned, steady at just under $103,000. Ethereum up 6%, 23.31. Solana up 5%, 171. XRP up 2%, $2.35. Sui steady at $4. Doge up 5% at 20 cents even. Checking out the crypto bubbles, we have Peanut the squirrel making a huge jump. Yeah, I was anticipating this, and there it is, 60% in a day. Pyth, which I think is Pyth Network, up 21%. Dog, I've never seen before, new looking coin. Rank is up 8, and they are currently up 17% for the day. Checking out the weekly, we've got Peanut up 100%, Cato up 70%, Mog, what the hell is that? Mog coin up 71% for the week. Turbo, holy meme mania, up 255% for the month. Turbo, interesting. Deep up 270%. Deep book for the month. AI16Z, the AI coin, which I don't think actually offers any AI utility whatsoever, up 166. It's meme season, folks. That's what we can see from this. And we also see that the Bitcoin dominance is down quite a bit. Generally, when that happens, is because Bitcoin, some market share is taken away from Bitcoin because the memes are taken over. People are pulling their money out of the BITI. The BITI goes up. Then people start pulling their money out of the BITI into the lower tier altcoins. And then once that happens, that even goes into the lower, what I call shit coins. Currently, the total hash rate sitting at very, very close to an all-time high at 910 billion terahashes a second. And the Bitcoin generally follows the hash rate. The M2 money supply, again, we see a very, very close correlation between the Bitcoin price in white and the M2 money supply in pink. Probably the closest correlation I see from any other indicator, and this is normally about 60 to 90 days behind. So you see there's the M2, and then 60 days later we get the Biddy. Let's see if we can zoom in on this a bit, and we can see very, very closely correlated here, the same jump. Then we've got the dip, and then how much closer can you get in terms of the same kind of charting? And yeah, this is not even up to date, even though I refreshed it. Bitcoin market cap at $2,042 billion. Ethereum market cap $267 billion. XRP $134 billion. Solana $84 billion. Doge $29 billion. Cardano $26.5 billion. Tron $24 billion. Number 11, Sui $13 billion. Chainlink $10 billion, and AVAX $9.2 billion bucks. Total market cap for crypto sitting at $3.22 trillion, with Bitcoin holding a 63.5% of that, down 2% from yesterday. Ethereum up 0.5% at 8.75%, and XRP steady at 4.3% of the total market cap. Currently, we are at a 73 in greed in our Crypto Fear and Greed Index. Yesterday was 65 in greed. Last week is 67. 1,069 days left until the next Bitcoin halving in 2028, with 154,102 blocks until then. Assets by market cap worldwide. We've got gold at 22 trillion, Microsoft 3.2 trillion, Apple 2.9 trillion, Nvidia 2.8 trillion, Bitcoin, the fifth highest market cap of any asset in the world, at $2.04 trillion. Amazon 2.03, Alphabet 1.8, Silver 1.8, Saudi Aramco 1.6, and Facebook fuckbook 1.5 trillion bucks. You can currently get 971 satoshis for a 1 fiat US dollar. US national debt currently sitting at 36,829 billion, with the debt per citizen at 107,591, debt per taxpayer 323,050. Doge has saved the U.S. economy $412 billion, which equals to $3,675 per taxpayer. This goes up about $50 a day. So, for the average American who's making, $150 a day, let's say, and they're also making another 50, suddenly their income's gone up by 25%. Kind of interesting. So good times with the savings, bad times with the debt. Let's see what happens. As I've mentioned before, $10 trillion of the $36 trillion has to be refinanced by the U.S. this year. So even though Jerome Powell keeps delaying with the interest rate cuts, at some point they're going to have to cut the shit out of these interest rates, because they don't want to be refinancing the $10 trillion portion at a high interest rate. It's going to happen. So we have JD Vance, the vice president, to headline the Bitcoin conference following Trump's lead last year. So last year the conference was in Nashville. This is the world's biggest Bitcoin conference, happens once a year. This year it's in Vegas, and we've got Vance has announced that he's going to be the headliner. Trump and Eric Trump are also going to speak there, but certainly we see that Vance is going to be the headliner, so that should be interesting. He's a pretty smart and well-spoken guy, so I'd like to see what he says. Last year I listened to the event live with Trump, It was pretty interesting. It was actually just a couple of weeks after his assassination attempt. So there was a half-hour delay before he got on stage because of some security concerns, et cetera, et cetera. But he spoke really well. And oddly enough, just as we see with many things in Bitcoin, great speech, good direction with the biddy, but yet the Bitcoin didn't move. So let's see what happens this time around. Cathie Wood, broskies, predicts AI and Bitcoin to drive the new phase of U.S. economic growth. ARK Invest CEO Cathie Wood sees a new era of productivity-led growth spurred by AI, digital assets, and automation, driving economic transformation and stabilizing inflation. After nearly 3 years of sector-specific slowdowns triggered by tighter monetary policy, Wood now sees signs of economic stabilization and renewed expansion. Her outlook hinges on the acceleration impact of AI and automation across industries, which she believes will reduce costs, boost output, and help keep inflation under control even as growth resumes. AI and automation. Wood attributed the anticipated economic rebound to a structural transformation underway in both the public and private sectors driven by generative AI and machine learning. These technologies are reducing labor intensity in knowledge-based industries, shrinking project timelines, and freeing up human capital for higher value tasks. As one example, she referenced developments at the U.S. Food and Drug Administration, where AI models are already compressing multi-day workflows into minutes, signaling a steep change, a little spelling mistake they've got here, in government productivity. She noted that similar efficiencies are emerging across finance, legal, logistics, and healthcare, where AI is rapidly becoming embedded in core operations. Wood believes this surge in digital productivity will not only lift corporate margins, but also serve as a deflationary force, counteracting price pressures that typically accompany growth. By automating routine processes and improving decision-making speed, companies can scale faster without proportionally increasing input costs. She urged that, unlike previous cycles driven by consumption or credit, this phase will be rooted in tangible efficiency gains. In her view, the U.S. is entering a new investment climate where declining inflation expectations align with rapid innovation and creating an ideal backdrop for long-duration capital. Bitcoin and Tesla at the center of her forecast is Bitcoin, which ARK continues to view as a transformative financial asset. The firm maintains a long-term price target up to $1.5 million per coin. The bullish projection is based on growing institutional participation and Bitcoin's role as a digital store of value and its relevance in countries with unstable currencies. Tesla also remains one of ARK's highest conviction investments, with a 5-year target of $2,600 per share for the electric vehicle maker. The projection is based on the expected commercialization of autonomous hailing fleets and advances in autonomous driving. So I've seen great videos about this, the robo-taxi. It looks fucking awesome, okay? And I just envision I buy one of these robo-taxis, right? Which looks like it's like a two-door, I would call it, it looks like a DeLorean, right? The doors even lift straight up like that. So I envision picking up a robo-taxi. It drives me to work, drops me off at work. There's no steering wheel, there's no pedals, right? This is like 100% autonomous. Brings me to work, drops me off. I go to work. Then I send this shit off to go fucking work, picking up and driving people around until I'm done work. Then it comes and picks me up and brings me home. So, like, think about it. It's like a second income. While you're working, you got this thing working for you on the side. It's kind of like, you know, I've mentioned before, I'm a computer guy. So when I first learned that, you know, you could make money with your computer from your freaking basement, Bitcoin mining, I had to jump all over that. I'm like, no self-respecting IT guy would not have one of these things set up. So this is kind of the next evolution here, right? A robo-taxi, fully electric, no pedals. You can sleep on the way to work, and then this thing goes out and works on your behalf, which technically would pay itself off, and probably, and then some, right? So you would almost have two incomes, because this robo-taxi would go out and work for you while you're not working. In her view, Tesla's strength lies in a simultaneous advancement in three critical technologies verticals: robotics, AI, and energy systems, giving it a strategic lead in the global innovation. ARK has also increased its stake in semiconductor and biotech companies aligned with long-term technological trends. Wood anticipates a broader shift from economic stagnation toward a phase defined by exponential innovation, scalability, and productivity, and sustainable growth. She looks like quite a nerd here, but when you hear her speak, she's not very nerdy. She kind of looks a lot better than she does here too. This looks like everybody's aunt who should be sitting there, crocheting on the couch or something like that. But she makes some great points. She's very smart, and she's been calling for her prediction for Bitcoin in 2029, I believe it is it's either 2029 or 2032, is $2.5 million a Bitcoin. I'm pretty sure it's 2029, and that's not that far off from my thought as well. I mean, if we can hit 300 to 500 grand Bitcoin this cycle, then we take that and we 5x it, right? Because really it's been going about 5x from the previous cycle, and we 5x that, we end up at this $2.5 million. So I kind of feel like she's bang on, and once again, it's another reason to never sell your Bitcoin. HODL for dear life, folks. Some big stories. Bitcoin whale entry prices diverge sharply. Confidence builds at higher levels. This means that the whales are still buying the biddy. It doesn't matter. They do not give a shit. It's kind of like the sailor put. They are going to buy this on the low. They're going to buy it on the high. They are going to buy it forever because it is going up forever, Laura. Bitcoin has surged to 104,300, confirming the uptrend and reinforcing the bullish outlook that many analysts projected for 2025. This move places Bitcoin deep into range highs territory, with the next major challenge now clearly in sight, the all-time high at 109,000. The market's strength comes on the back of strong technical performance and increasingly optimistic sentiment as Bitcoin continues to lead the crypto rally and altcoins follow suit. On-chain data from CryptoQuant adds further weight to bullish narrative. One standout metric highlights the growing confidence among the large holders. The absolute difference between the realized price of new whales and the old whales now stands at 59,000. Specifically, new whales have entered the market at an average price of 91,992K, while old whales basis remains at 32K. This translates to a 185,000 relative spread to the long-term holder basis, a massive divergence. This wide gap signals that a new wave of high conviction buyers is entering the market at significantly elevated prices. Unlike the cautious whale accumulation during the previous cycle lows, this phase reflects strong belief in continued upside, even at premium levels. It's a clear sign that the institutional FOMO may be kicking in. And why not? Because if you look at the charts, folks, Bitcoin was up in the past 30 days over 30 grand. And, these whales, we're not talking about, one Bitcoin holder. We're talking about these guys have between 1,000 and 10,000 Bitcoin. So if they had 10,000 Bitcoin, that would be a $400 million month for these guys. Bitcoin is currently encountering a resistance around the 104,000 mark, a level that may take time to break as it represents a critical barrier before entering price discovery above the all-time high of about 109,000. The recent rally has shown remarkable strength, but as Bitcoin consolidates just below its all-time high, some selling pressure is expected. A successful breakout could lead to a swift surge beyond 109,000. However, failure to do so may result in a short-term consolidation or retracement. Top analyst Axel Adler shared key on-chain insights on X that highlighted the evolving psychology of Bitcoin's largest holders. According to Adler, the absolute difference between the realized price of a new whales, 92,000, and old whales, 32,000, is 59.60K, representing 185,000 positive relative spread to the long-term holder. The sharp divergence reveals that new whales are entering the market at nearly 3 times the price of early entrants. Right? So, as mentioned, they do not give a shit. They see an opportunity and they're jumping on it. And, you know, I'm sure when they're buying 1,000 or to 10,000 Bitcoin, that's just a drop in the bucket, right? So, in comparison, the same spread in November 2022 was only 62%, indicating more cautious accumulation near the market bottom. The current surge to 185% reflects rising confidence and FOMO, with large buyers willing to commit even at elevated prices. For context, during the 2021 cycle peak at 69K, the spread widened to 437%. This trend suggests that the market is entering a more aggressive accumulation phase where belief in higher prices is driving demand despite the premium. If bulls manage to absorb the resistance around 104,000, it could mark the start of a parabolic move fueled not just by momentum, but by conviction from retail and institutional players betting on a new Bitcoin all-time high. Key levels to watch for Bitcoin. Bitcoin is trading around 103,000 after reaching 104 yesterday. The 4-hour chart shows Bitcoin facing resistance at 103.6, which aligns with key supply zone from late December 2024 and early January 2025. This area acts as a previous rejection point during the last major rally and is now being tested again as potential resistance. So, here are the numbers. Here is the all-time high. So we are really hoping to not see that much resistance. I certainly expect much. You know, what happens is people have bought their Bitcoin at lower prices. Let's say they bought it at 90K, 95K, and their shirt's getting all sweaty because they made, 12%, and they start selling, and that effectively, selling will drive down the price, buying will drive the price up. So I could see the price dipping. However, if we look at it right now, I'm not seeing much of a dip at all. $1,000, like 0.5%. Is jack all, right? This is not a sell-off by any means. Some of the altcoins, the shit coins, if we go back to crypto bubbles and look at, it's hard to find anything in the red, actually. But certainly there's got to be some shit coins that pumped and dumped, right? They're pulling the rug under people. They make their money. It went up, 20, 30, 50, 200%. And they pull out all their money, and every grandma is left holding the bag because they're kind of slow to react, and they're thinking, I'm going to hold this shit coin for years. Meanwhile, all the liquidity is already pulled out because the initial creators of the coins, of course, when they create them, kind of like the Trump coin, let's take that for example. You don't think that Trump bought 25 or 50% of the total supply of the Trump coin before it launched, right? Of course he did. It pumps I think the market cap went to like 60 billion at some point. He probably pulled half his money out, maybe more, and that's a big fucking chunk, right? 30 billion bucks all of a sudden getting pulled. I'm not suggesting 100% this is what happened, but this is what shitcoinery is all about. So careful out there. You could lose your shirt, so I don't want anybody watching my show losing their shirt, that's for sure. If you want recommendations on shit coins, I would suggest going into a couple industries. One, of course, is the gaming infrastructure coins, and the other would be real world assets. So gaming infrastructure is all about the back end of gaming. A lot of the games are going to be starting to use the blockchain and as their infrastructure. So these coins are basically the backbone of it. If I kind of check out a couple here, the ones I like, let me rephrase that, the ones I'm buying are Avalanche and Superverse. I'm pretty big on both. I bought the dip a little while ago, and both are up 30%. So you could certainly see that, and this is in 4 days, right? So you could certainly see how when the Bitcoin really pumps to its all-time highs, these little shit coins could jump by 20, 30, 50%, not 50%, 50x. But again, you've got to be careful with these coins. They're not as stable as Bitcoin. So as they go up, they likely will come down. So if you are expecting that you're going to buy some of these things and just sit on them, great. You can sit on them and not do anything, sit on your couch and wait for them to go up. But when the turn of the cycle peak comes, those are going to be the first ones to go to zero. So generally, you're going to see the shit coins, as I call them, pump a little bit after Bitcoin. So Bitcoin will pump, right? Everybody's watching Bitcoin. Everybody's looking, hey, what's happening with Bitcoin? All the money's going into Bitcoin because the price is going up. And then once people start making a little bit of money, Bitcoin then starts to go sideways. Once it starts to go sideways, people are then taking their money out and they're putting their money into the altcoins. First, they're going into, the big altcoins. We'll call them Doge, Sheep, Pepe, these types of things with large market caps. Then they get a little more risque and they start putting their money into the shit coins. So not to say that the couple gaming infrastructure coins that I mentioned are shit, but what I'm saying is they could pump 20, 30, 50x, but they could also dump really freaking fast and you could lose your shirt. So if you're going to get into those, expect that you're going to lose your money, right? That's how you have to go into it. And certainly, for me, I'm putting like 1%, 2%, 3% max of, my cash. I'm not putting 100% of my freaking money in a shit coin, no matter what the potential is for it. So the other is real world assets, and everybody's heard. I haven't really researched that much, but I know this industry is going to be huge along with the AI coin industry. But the RWA, real world assets, are basically where the world is going to end up going. So eventually you keep hearing that every real estate deal is going to happen on the blockchain. So your whole deal is going to be there, public, not through lawyers, not on paper anymore. Insurance, the same thing. There's actually companies, huge companies around the world that are already using the blockchains for this stuff. So RWA is going to be huge. I'll see if I can research some of the larger players in this. Now, the two that I mentioned with the gaming infrastructure, those are probably the larger cap. You can go on down the line, but the lower you go, the much bigger risk you're taking, and it's already kind of a risky sector. So I don't know how far you want to go into that. And again, if you get into it, be very, very cautious. Watch that shit every single day, every single moment, and don't get greedy. If you made 20x and you're trying to make 22x, you're an idiot. Like, take your freaking 18x, for example, and get the fuck out of there. You already did well. That's what the creators are going to be doing. That's what the people that are holding bags of this shit are going to be doing. And don't be the grandmother left slow to move, holding this coin while everybody else has already exited, because that's when you're going to lose your shirt. BlackRock, baby, meets the SEC Crypto Task Force to discuss tokenization and ETP rules. The meeting followed another encounter on April 1st where BlackRock also discussed staking and ETP rules, but now added tokenization. Representatives from BlackRock met with the U.S. SEC Crypto Task Force on May 9th to seek guidance on a range of crypto regulatory issues, including tokenization, staking, and approval frameworks for exchange-traded products, ETPs. According to the meeting memo, BlackRock reviewed its digital assets offering, including the iShares Bitcoin Trust. IBIT is the ETP ETF code on the stock market, the proposed iShares Ethereum Trust, ETHA, and the BlackRock USD Institutional Digital Liquidity Fund, BOIDL. The firm used the opportunity to solicit input on how current and future products might be regulated under federal securities law, particularly as the digital asset market matures. The meeting included senior representatives from the regulatory affairs, legal, digital assets, and ETF markets. Following a prior session on April, BlackRock continues to directly engaging with the SEC on crypto policy matters. Last month, the firm discussed technical elements of in-kind redemptions for crypto ETPs and shared a detailed document on existing workflows under the current cash model. Additionally, the firm outlined how these systems might adapt to support alternative models for crypto-based funds. BlackRock also outlined its views on incorporating staking features into ETPs, aligning with other recent industry proposals reviewed by the SEC. Staking has become a central issue in ongoing discussions over whether proof-of-stake asset exposure with ETP can be designed to meet regulatory expectations without compromising liquidity or investor protections. The meeting also addressed tokenization, with BlackRock requesting feedback on how tokenization efforts could be structured within the existing securities framework. Tokenization is the process of representing traditional assets in the blockchain as digital tokens. The firm also suggested interim standards for crypto ETP issuers, asking the SEC to consider codified guidance that might apply ahead of broader rulemaking. BlackRock additionally discussed the criteria under Section 6B of the Exchange Act that could be used to evaluate whether a crypto ETP satisfied the regulatory thresholds for exchange listing. These criteria include assessments of market integrity and investor safeguards. Lastly, the meeting with the SEC Crypto Task Force covered options on crypto ETPs, with BlackRock raising technical questions about position and exercise limits. The firm requested clarity on how such limits could be structured regarding liquidity thresholds for the underlying crypto or ETP shares. So, what's kind of cool about this is now as opposed to the Dems and Gary Gensler. BlackRock's going directly to the SEC. They're asking questions. They're transparent. They're open. They're public. And I'm pretty sure that they're going to get the clarity they're looking for. Whereas before, it was a whole bunch of, I don't know, delay. Now, I'm sure even fucking Gary Gensler has bought Bitcoin. I'm not, these cheap bastards, they're not going to forego any possibility of, missing on making a buck. So I guarantee, if BlackRock's into it, all of Wall Street's into it, and everybody else has got their hands in some of this Bitcoin. So, is it a good thing? Is it a bad thing? Well, it's a catch-22. Of course, when Wall Street and corporate America sees that there's money to be made, and it's not just America, it's the whole world, they're going to jump in on this thing, right? It's the FOMO, fear of missing out. Now, it's supposed to be the people's money, and we're seeing that BlackRock now has 600,000 plus Bitcoin. Michael Saylor, Strategy B, has 550,000 Bitcoin. So the U.S. Strategic Reserve, Janet Yellen is talking about adding up to 1 million to 5 million Bitcoin to this reserve. So on our side, the common folk, I feel like it's a positive thing. I feel like this stuff will drive up the price. If the U.S. government comes out and says, we just bought 1 million Bitcoin, well, that gives confidence to the world that it's validation, right? I mean, BlackRock's already given validation to it. And then if the U.S. comes out and says, we've got, instead of, 100,000 Bitcoin, or they currently have 200, but 100,000 of it is confiscated. It doesn't own, they're not the owners of it. They have to give it back. So they really have 100,000 Bitcoin. So if they come out and say, we're buying now, or we just bought 1 million Bitcoin, the price is going to skyrocket, right? I personally feel like the big whales and nation states, pension funds, they're all buying it, but they're doing it on the low, because if they start announcing it, the price is going to be driven way up, and they want to buy it obviously at a low price. If the price goes way up to 200, 300 grand, well, it's difficult to buy at those prices. So but at this 90k or 75, 77, where it was kind of taking the dip about a month and a half ago, these were respectable values, and it could have been that they were actually buying it at that price, and just nobody knows, right? At some point, though, they're going to come out and say, oh yeah, by the way, we bought 1 million Bitcoin. When they're done buying, that's when they're going to come out and announce it, right? They don't want to do it before they're done buying. That's kind of my take. Once they announce it, the price is going to jump. Once they announce it, then maybe it's almost time for them to sell, right? And maybe it's time for us to sell. I mean, can't we use it as a pump and dump? Yes, we can. There's two ways to look at it. There's the never sell your Bitcoin. And yeah, everybody says that. And that's the number one rule in Bitcoin. But at what point do you actually use all the gains that you made? If you're 50, 60 years old, how long can you wait before you take your gains, right? Okay, if you're 20 years old and you got a Bitcoin and you feel like it's 5xing every cycle, and you can wait 20 years, well, maybe your one Bitcoin will be worth 50 million bucks. So maybe it's worth waiting and drawing a little bit at a time. But if you're older, how long are you going to wait? At some point, you are going to want to take your gains. Anyone who's hodled more than 4 years thus far has been in the green in Bitcoin. People that have hodled for over 10 years or 2 cycles or 3 cycles are not only in the gains, they're way up, like hundreds and hundreds, if not thousands of percent. This is the best approach. If you have the time to wait and you don't need this money, wait it out. Always keep an eye on it. It's not one of those set it and forget it kind of things. Some people that set it and forget their fucking passwords, right? Forget how to get their money out of cold storage. They lose their wallet. There's so many possibilities. So you want to not only be in the game, but protect your gains. Always do your testing and make sure that your logins work. Have a backup of these logins somewhere. Maybe on paper is actually a good idea. You have a digital copy, you have a paper copy somewhere hidden. This is probably a good way to go. So you never end up dumpster diving like that British guy who his girlfriend threw away his hard drive and it's worth like 300 million bucks. But he can't find it. He can't get to it. And the dumps doesn't even want him in there. So, don't be that guy, right? Folks, remember that money is everywhere and it is abundant. There's $900 trillion of assets around the world. So get out there and get your share. Use your time wisely because it's time that's scarce. There's lots of money. There's not much time. Spend less money than what you earn always. And if you suddenly start making more money, start saving more money instead of start spending more money, it doesn't make sense. You want to start investing when you're young, ideally in your late teens, early 20s, and retire hopefully when you're 40 or 45 and not 60, 70 when you're too old to actually enjoy the fruits of your labor. If you have a great idea, start with it today. Don't wait for tomorrow. Start today, even if you're not ready, and things will come together for you. Here at CryptoNews Global, folks, I am so happy when you watch and you join in on the conversation. Speaking of, let's check out some of the contents. BTC flips Amazon. Indeed, they did flip Amazon. Let's go back to the chart so we can kind of analyze that. They flipped Google a short while ago, and they flipped Amazon. I mean, next up, Nvidia, right? It just takes another good pump, and Nvidia and Apple and Microsoft they're next. There's no question about it. When the cycle peak comes this year, which if we're going via history, we're talking November, the year after the halving, and we are currently in the year after the halving. So basically in 6 months from now, these will be flipped. I can't guarantee it's going to stay at this level, number 2 under gold when it finally flips these. But at some point it will flip these, and then the 2028 cycle, these things will be chump change. Bitcoin market cap is going to be well into the probably 8-10 trillion bucks by then, right? You will then start seeing people flipping their gold and buying Bitcoin with it. And I think that the gold market cap will start coming down and the Bitcoin market cap will eventually even flip gold. So thanks, Xerx, for your comment. Love it. Cathie Wood, buying in top signal. LOL. Who is liable if your robotaxi gets into an accident? Tesla definitely not taking the blame. Yeah. I don't know. That's a good question. You're clearly going to have some kind of, taxi style in insurance, or there's going to have to be another category created just for this robo-taxi kind of thing. Good morning, Billy Grande. Nice of you to join again. I always love it when you are on board. Let's send some hearts out to Zerks and Billy Grande, the good folks on the chat here. Celebrations all around. And Zerk says, but definitely not all of them. I think he's still talking about Tesla. And you know what? You're bang on, Zerks. There was a friend of mine who he ran out of work last week, and my brother got into an accident, and he ran. He's in the hospital, and he took off. And then a couple hours later, he sent me some pictures. And what was it? He crashed with his Tesla. And some teenager, I don't know what the situation was exactly, but crossed into oncoming traffic. His brother tried to avoid him in his Tesla, but he still ended up hitting him. And what I didn't realize, I knew it, but I didn't realize that. So because there's no engine in these things, these Teslas, the front is just like a trunk. So this thing was caved in, like frickin' gone. Thankfully, it was on the driver's side. But if it was on the passenger side, it definitely would have caved in enough to do something to his legs, right? He was okay, but Zerks, you make a good point. Like, what kind of liability would there be? Certainly, this is something you probably would have to pay a big premium for insurance on a robotaxi. But you have to admit, it's a great concept. And I think Cathie Wood is bang on with their Tesla prediction. I think when the prices were way down, when everybody was, picking on Elon because he was saving money because he was saving everybody money, and the price of his stock started going down, I think that would have been a great buy the dip moment for a lot of people. I'm sure lots of people did. I didn't, but $2,900, that's a pretty big jump from where they're at now. Folks, hopefully you find this fruitful and enjoyable and informational. I'm on a path here to have over 500 subscribers, so please, if you haven't subscribed yet, please do so. It is free, and you can always change your mind, of course. And let's see, Tesla moving like a meme stock. LOL. I haven't checked it out in weeks. I was really only looking at it when it started to dip, and then my friends were all freaking out because they were like losing their shirts because they had Tesla stock. And, some of them were like, I'm sure it'll come back. And lo and behold, some of us were like, well, buy the frickin' dip, right? You own it. And now the price has gone down. Well, that means you can get some more cheaper and bring down your average costs. I don't know if they did or not. But then we saw that exactly what you said. It's moving like a meme coin stock, like GameStop did. Was that last year or a couple of years ago? So, folks, again, please do subscribe and share, comment, and pass this along because it helps the algorithm. And we will see you on the next stream. It was really nice of you guys to join, and we will talk to you tomorrow. Have a good night.